Is this the buy the dip opportunity for Baidu stock? We know that the emerging markets have been having a very tough time in recent years, and many of them have actually crashed north of 50% at this current point in time, especially the conglomerates over in China, such as Baba and now as well Baidu. And this has a lot to do with a lot of the sanctions that are going on against monopolistic behavior. But will those sanctions last and keep the stock price suppressed? Baidu has just reported their Q4 2021 earnings, and on the day, they're actually up about 7% since they reported. So that means Wall Street was relatively content with what they saw from the report. So will we be seeing a rebound in price from these levels now that they've dropped 50%? And are we missing out on a massive opportunity to add this to our portfolio at cheap valuations? Keep watching to find out, as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. But with that being said, today we're going to take a look at Baidu's Q4 2021 earnings results, where we'll do a deep analysis into the financials. We'll go ahead and we'll take a look at any of the technical setups, and we'll take a macro look at this to see if there's anything that's setting up at these key levels here. And finally, we'll conclude with the valuation of the business to see whether or not this is something we as retail investors should add to our portfolios or not. And if you enjoy the analysis and the investing perspective, please like and consider subscribing for more of this content. All right, so before we jump into the earnings highlights and then the financials, let's take a look at the technical setups. And actually, let's take a look at the macro view, which we alluded to earlier, and see what's happened with Baidu. And as you can see right away, you see a lot of whipsaw action, up and down, highs and lows. And this is honestly what's common amongst a lot of the emerging market stocks. So we'll see rises of, 650% and then declines of 50%. And then back up to rises again of about another 200%, right? And then we're back down to lows of 50%. This pattern continues until we've reached our all-time high up here, which is up 327%. And we've just recently, since 2021 really, we've seen a crash and decline in the stock of about 50 to 60% here. So we're at this current point, and I mean, the question really just becomes, are we going to see that whipsaw action right back up to the top? Well, the truth is we'll never really know. But what we can do is we can give ourselves a slight edge as to what we can predict will be the outcome in the future. So right away, I see some key support at these levels here at around $85 per share. Now, what's the likelihood that Baidu actually gets down there? It's not very likely. As we can see here, there's even more support holding the stock up at these levels here, which is the 130 levels. And so that's where we're currently bouncing off of, and we're already back into this $160 price range. So if we continue this move higher, where could we see the stock finding some resistance? And from what I can see, it'll be around this 210 level, which is where I can see us having a tough time getting through these levels. And if we push higher than that, 270 here should be very, very tough resistance, as every time we've gotten up there, it's been forced right back down, as you can see. So this is kind of the range we've been trading in. And if we zoom in here, we can see our moving averages are stacked around this level, and that's why we're consolidating after this strong push down. So what we can either see here is once we finish consolidating, we're either going to see a push down into these 85 levels, or we're going to consolidate for a little bit and push up into 210s. Either way, if it pushes down into these levels down here, great buying opportunities if this turns out to be a worthy addition to our portfolios. And if this thing takes off without you, you might be able to get into some trades here and ride the wave up. But with that being said, let's jump into the financial analysis and see what exactly investors have liked about this earnings release. All right, so without wasting any time here, revenues came in at 5.19 billion, which was a beat by 100 million. Actually, when we look at this from a year-over-year perspective, they're actually up for their core revenues 21% year over year, which is strong double-digit growth from Baidu. If we look at the earnings per share, this also beat by about 40 cents, coming in at $1.82, which indicates analysts actually were expecting a tougher year for Baidu, and they actually came in and beat expectations. That's what you want to see from a business that is down 50%. Now, onto their highlights. They mentioned in their report that they have IQIY subscribers reaching 99 million users in 2021. Now, if you're not familiar, first of all, Baidu is the equivalent to Google, just based in China, and they have a ton of subsidiaries. So IQIYI is one of them, and it's one of their largest ones, and that's why they've made this claim here in their highlights. Now, they also mentioned that their share repurchase program for the year of 2021 allowed them to repurchase about $1.2 billion worth of stock. And this is something I like personally because they're repurchasing shares at a high rate when the stock price is so low. And if we divide this by the market cap of about 53 billion, This is equivalent to them rewarding the shareholders with 3% just from the buybacks alone. So we'll keep this 3% in mind when we get to the valuation later on. And in terms of their outlook, they've just mentioned that they're going to look to continue to grow at high rates. They're not paying a dividend or anything. Their main focus right now is repurchasing shares and also for further growth investments. All right, so let's take a look at their financial statements here. So what we have here is the 2020 figures as well as the 2021 figures. Over here is the US figures, but because we want to be able to compare year-over-year results, see the growth metrics and whatnot, how their margins have increased and whatnot, we are going to take a look at the Chinese figures so that we can then make that accurate comparison. And starting with the revenues, we can see for 2020, their total revenues were 107. In 2021, this jumped up 16% to 124 billion. All right, when we get to our expenses here, we had 55 billion. We add in all the other expenses, we get to total costs and expenses of 92 billion versus the 113, let's say 114 billion this year. They mentioned that the increases in expenses are due to some content costs, marketing, bandwidth costs as well, etc. So yeah, they're increasing their growth investments as we mentioned before, and it's ultimately the result of the higher expenses that they've incurred, which we can track right here. Now we move on to our operating income, and this is actually down 27% year over year. Again, they blame this all on the cost that we just explained. And so once we add back in the remaining expenses, we get down to this figure here. Again, 10 billion for the year of 2021 versus 22 billion last year. A sizable decrease, pretty much 50% decrease in net income. And so after seeing this, you might be wondering, they're down 50% in net income. What did Wall Street actually like about this earnings release for them to be up 7%? Well, let's keep moving and we'll go to the balance sheet next. All right, so under the balance sheet, what do we see? We see cash has stayed relatively flat. Short-term investments have increased about 20 billion. Everything else is relatively flat, but that's why we see this, 20 to 30 billion increase in their total current assets. In terms of their long-term assets, we see that they have a lot of long-term investments, and that's what makes up a majority of their long-term assets, which is equivalent to about 166 billion. When it comes to their liabilities, I want to see what kind of debt figures that they have. Currently, we're looking at about, let's say, 4 billion in short-term debt. We'll add back in their long-term debt figures of about, let's say, 13 billion here, 43 billion here, another 12 billion here. So let's just round up and say it's about 70 billion in debt. And when we add this here to our current asset figure of 213 billion, we're able to see here that their debt is not an issue for them as well, as they already have 36 billion in cash along with short-term investments, which they could turn into cash easily if they wanted to, and they're easily able to cover the debt figures there. So the debt is not an issue. Balance sheet gets a check mark. All right, now in terms of their statement of cash flows, we'll use the 12-month figure again. And Baidu automatically gives us our net cash provided by operating activities here. This is without IQ and this is with IQ. So we'll use the figure with IQ because it is a part of their business. And actually, they've given us the calculation right down here with these same figures. They also provide us with this CapEx figure here, so we have an easy calculation. We have CapEx of about $11 billion, and we get to free cash flow here of about 9 billion, which again, if we compare this to last year, we see was at 19 billion. This is a decrease of just around 50%, which is definitely not something you want to see from a potential investment. But that doesn't mean that this isn't an investable business, even though they have decreased. This could be a one-time occasion, a one-time occurrence. This stock could still be undervalued for at least a 10% return. So let's take a look at our financial calculator to see what exactly shares of Baidu are worth based on their free cash flow figure here. And actually, just before we do that, I want to make sure that we're actually looking at the correct figure here, which is actually going to be this 1.4, let's say 1.5 billion figure here, which is actually their US free cash flow value. All right, so for Baidu here, on the one hand, we have net income increasing, let's say 21% year over year from a fiscal year perspective. But then we also have expenses increasing, north of 30% in some cases year over year. And that's really what's drawing down on the stock. So it's really going to depend here for Baidu on what they can do with their expenses. If they can decrease the amount that it's increasing by, we'll see a great appreciation in the stock price. But if not, we might see this stock declining. But let's use their free cash flow figure, which we said, let's say they can continue to grow. And let's say it gets to, let's just use this 1.5 billion number here. Remember, they do have a market cap of 53 billion, so we'll keep that in mind when we go through our valuation, but they're not paying a dividend, so we'll keep that out of our equation. Let's say that they continue to grow at, 20% in a normal case, and then it'll drop to, for the next 5 to 10 years after that, it'll drop to, let's say, 13, 14%. On a 20 PE, we could actually argue that Baidu is fairly valued right now. If Baidu is able to increase their growth rates and they start growing at 25% for the next 5 years, and then the subsequent 5 years, let's say they can only grow at 15%, on a 25 PE, the stock could increase by about 50%. And in the worst case scenario, the growth stops, they only get to 10% for the next 10 years on a 15 PE, then yeah, the value will pretty much halve and the value will really be sucked out of Baidu. So with that being said, what are we doing with Baidu stock here? We're sitting at around $160 per share. Our margin of safety level is half of that, which is about this $85 price range. And if Baidu can get off their feet here and reduce the amount of expenses that they're incurring, we can actually see this stock double again back up into these 300s level. And that's the risk reward with Baidu. So please let me know what you think about Baidu in the comments below. If you enjoyed this video, give it a like. And with that being said, this is my analysis of Baidu. If you made it this far in the video, I'm wishing you well, and until next time.